Hello and welcome to the Mortgage Minute with Matt Devine. I'm Adam Kedish with Kedish Realty Group and the one and only Matt.
How are we doing?
Doing well.
Nice to see you again.
Yeah, so thanks for coming in today, and what we're going to talk about on the Mortgage Minute is loan types and requirements. I know there's a lot of questions out there when it comes to whether it's conventional, it's FHA, it's a renovation product. I don't know all the terms and loan types.
Sure, what does it all mean?
Right. So why don't we start out simple? Let's do straight conventional.
Conventional loan. Yeah, I mean, there's a lot of people still call me in today's day and age and say, oh, I can't go conventional. I have to have 20% down. That is very far from the truth anymore. That's what mortgage insurance companies offer. Mortgage insurance companies offer those that don't have 20% down the ability to put as little as 3% down on a conventional loan.
Okay.
So 3% down, 5% down, there's several different loan amounts that you can go on conventional.
Okay, so conventional, we can go as low as 3 or 5, or even if they want to do 20.
Yeah.
I'm assuming there's a better rate if they get a higher percentage down.
Yeah, generally, yeah.
Okay. What are some of like the basic requirements around a conventional loan? What would like be the credit score?
Sure. Well, credit score wise, generally if your credit score is you're below a 660, it's financially it's going to make more sense to go with a government loan, which is the FHA loan. The biggest thing with conventional financing is there is a restriction on debt to income ratios.
Okay.
You don't generally want to see your debt to income ratios be 45% or more, which means that your monthly debt is soaking up 45% of your gross income. They have a pretty tight restriction on that for most files.
Okay. And requirements for the house type. If I'm a conventional loan, does the house condition matter? Can I buy a house that needs a lot of work?
So there is, to answer your question, yes. In order to have just a normal conventional loan, and not talking about a renovation loan,
correct.
The house has to be at least in average condition in order to get a loan on it.
Okay.
If it is in less than average condition, then that's where a renovation loan would come in, to where you could finance some of the items that would be needed to renovate the home and to update the home.
Gotcha. Okay, so let's dive in a little bit on the condition of the property. You said average condition, so I'm assuming it could be dated.
Yes,
but it has to be livable,
right.
Functional.
Yeah, there's many homes, as I've seen in some of your Friday funnies and pictures, where it's livable and it would be considered average condition in some of those cases. But literally, when I say if it's not in average condition, that means there's not running water. There's not. There's some safety issues that could be present within the house.
Gotcha. So the house you have to be able to move in relatively soon.
That is correct. It would have to be in pretty bad shape for it to not be in average condition.
Okay, great. Well, that's easy on conventional. Let's move on to FHA or government-backed mortgages.
Yeah.
What do those look like?
FHA, appraisers, first of all, when I'm talking about the appraisal process, they're looking for a few more things that conventional appraisals would not look for, such as peeling paint. That seems to be a big one. If there's peeling paint on the house, it needs to be scraped, painted, and fixed.
So peeling paint, okay.
Window seals, windows. If there's cracks in windows, they'll call that out. If there's, it could even be peeling paint on a shed in the backyard. FHA could potentially call that out. But as it goes with the actual loan process itself, FHA financing is very, very flexible for those that don't have as good a credit that might take them the conventional route of financing. Debt to income ratios are a little bit more flexible with FHA financing, so it opens up the door for a lot more buyers than what conventional may at times.
So to kind of compare the two, conventional is more on the borrower, less on the house. Right. FHA is going to be more of a balance between the house and the borrower. They want to make sure the match is a good fit. The borrower is buying a house that is in good quality, good condition, better condition than a conventional.
Yeah, their FHA is going to be more designed at making sure the house is in a little bit better shape, if you will.
Gotcha. But maybe a little bit more flexible on the borrower?
Quite a bit more flexible on the borrower. With debt to income ratios, where conventional you're stuck at, keeping it at a 45% debt to income ratio. I've seen some on FHA with compensating factors. Maybe they have some money in the bank. Maybe their debt to income ratios are low, or I've seen some where they'd go up to 55, 56%
Gotcha.
in order to stay approved.
Okay. So depending on, and you're going to help the borrower when they go through the pre-approval, you're going to help them understand which product is going to be the best fit for them.
That is correct. I give them a side-by-side comparison, and I let the numbers speak for themselves.
Perfect.
And I point out the pros and cons of each option, and we go from there.
Gotcha. And then the other loan types I wanted to kind of talk about is renovation products. I know there's a government side, there's also a conventional side. We've all watched HGTV, and I know I've got some clients that would love to do some of those flips, but they just don't have the cash readily available. So tell me about these renovation products.
Yes, two different types of products, FHA Streamline, or there's FHA renovation product called the 203K.
Yep.
There is a conventional home style renovation product that Fannie Mae offers that we have the ability to do in our office.
Okay.
Really, it's both types of renovation loans allow us to go up to 97% financing, conventional 97%.
Oh, great.
FHA 96.5%. But they're both very easy. A perfect situation where somebody may utilize this product is if the house is outdated, the kitchen needs to be redone.
Right.
Maybe there's some big ticket items that need to be fixed in the property as you go through inspections. Some of those things are able to be financed into renovating a property and put it into a loan.
Okay. So Mr. Buyer goes out, looks at a property, definitely needs work. It's foreclosure of some sort.
Yep.
No clue how to get started.
Yep.
I mean, they don't have a budget on this. Is there any type of requirements that the loan requires that we could make sure the borrowers are prepared for so we can start helping them get the bids and things done?
When it comes to them getting approved for the type of loan, it's the same process as getting approved for a conventional FHA loan. Really, the only difference is from the start of it, you want to get a general contractor in order to have them go out and prepare a scope of work so that we have an idea as to how much work needs to be done to the property, and then that's something we give to the appraiser so he can give us a value. Assuming that work's done, he gives us a value as to what that house is going to be worth after the fact.
So we need a scope of work.
Scope of work's important.
You've got to have a contractor.
Yep.
What about somebody who's pretty handy, wants to do some of the work themselves?
There is some self-help that can be done. There are certain restrictions on how much they can do.
Okay.
But yes, there is some ability for self-help to be done.
Okay. And is there like a condition that they have to get the property to? Meaning, does it have to get up to like that normal FHA livable condition, or is there just maybe some big ticket stuff they can take care of, like maybe siding, foundation, and a roof, but the inside's still dated?
It has to affect the value.
Has to affect the value.
It can't be just
okay.
repairs, because repairs aren't going to affect value of a property.
Right.
You want to make sure that the value is also going up as you're financing things into your home.
Great.
So if the fixes that you're doing to the property aren't going to affect the value, then it's going to be tough to finance those into the loan.
So what I hear you saying is it can't be just deferred maintenance program or deferred maintenance pieces. It has to be improvements to the property.
That will affect value.
Maybe we are doing some deferred maintenance like upgrade or replacing HVAC, but also renovating the kitchen.
Right.
Things like that.
Exactly.
Okay, great.
Yep.
What other loan types are out there that we should talk about?
Conventional and FHA, I would say make up the bulk of our business.
Okay.
VA loans are fantastic loans for veterans. We do a lot of them. Fairway was in 2017 was the number 6 retail lender that did VA loans in 2017. So we're very, very accustomed to them. We love to help out veterans. It's a fantastic loan. USDA loans are another one. USDA loans is another government-backed loan that offers 100% financing, but you are restricted to that loan in rural-type areas. There are income restrictions to that particular loan. I usually don't see that loan very often unless you're down in the southern parts of the Johnson County, Franklin County.
Gotcha. The more rural areas.
More rural areas,
okay.
Yeah. But it is certainly available.
Awesome. And then on those requirements for USDA, it's on a case-by-case basis, right? It's going to be based on property address.
Yes, yes. The first thing and the most important thing is to get the address of the subject property to make sure it is a USDA eligible property. And from there, we go to qualifying the borrower if they can get qualified for USDA loan.
Great. All right. Well, So there you guys have heard it, all the different loan types that Matt and his company do. If you guys have questions on which type works for you, I think the best way to start with an app.
Yes, best way to start with an app. I'm a resource. If you don't want to fill out an app, you can call me at any time and I can simply be a resource to help answer questions for you.
Awesome. Well, that is our Mortgage Minute with Matt. Thank you so much for tuning in and listening. If you guys have any questions or concerns or comments, please feel free to reach out to us at kedish.com. And as always, we'll have Matt's information in the bottom as well. Thank you.
Take care.